The market closed down today just under 2%. There was a lot of stuff going on out there. And if you look over at the heat map on my screen here, you can see NVIDIA led the charge down about 6%. And that's interesting because yesterday was a record close on NVIDIA. You can see Microsoft was down just over 1%. You have these big ones: Oracle, Adobe, Palantir down about 8%, Apple down 1%. That's a big one. Meta down 2% after Dana White was just named to the board. And the Lizard King came out and did an absolutely incredible 5-point transition to what they're doing there. They are going to get rid of the fact checkers that really didn't check any facts. They just spewed their nonsense on there to go towards more of a community notes. They are going to be taking after X. My theory behind this is, X is working, therefore we need to fix Meta. We need to make Meta more like X because it actually works. And if we come back to the screen, you can see this was kind of the big news of the day. U.S. job openings inch higher as quitting rates drop amid broader market slowdown. You were expected to see here from the Bureau of Labor Statistics, 8.1 million jobs. They were open at the end of November, an increase from 7.84 seen at in October, the highest level since May of 2023. Let's look at this graph here. Let's see what we have. Hires fell. You can see hires are on the decline. Hires are kind of sitting where they were in June. Job openings are climbing, 8.1. That was a pretty big spike up there. When's the last time we were there? That wasn't too long ago, April, May. Also, a couple of other things. The treasuries. Treasuries were fluctuating around today. And this was after the job openings data, of course. Now, the yields, where do the yields sit? Let's see. Treasury yields, Bloomberg. Let's see what we have there going on with the yields and from Bloomberg. So the 3-month treasury currently is sitting at 4.3%. Man, I remember this when this was well over 5%. It was awesome. The 10-year treasury is 4.69. I don't know if we're getting a flattening of the curve. Where's the 2-year? 4.3. It's not what it was. The curve was inverted for quite some time previously, but yields changed a little bit. People are freaking out about that. I'm interested to see, now why are they freaking out about this? The interest rate environment. Nobody knows what's going to happen with interest rates going forward. That's kind of the curiosity, especially with the changing of regime that we have coming in 13 days. So if we come here to the CME Watch tool, remember the last meeting that we had in December, they cut interest rates by 25 basis points. Now we're looking at a January 29th meeting. That's Wednesday the 29th. We are looking at a 95% chance of not changing the rates. Now let's go through the rest of the year. I'm curious to see this for my own knowledge. So March, what do we have happening in March? Consensus is that we stay the same. There's 37% of the market saying that we're going to get a 25 basis point cut in May. Wow. Stay the same. 41% chance. So is there any, so here's the big spike. I shouldn't say big spike, but the spike. We have about 45% saying that we're going to get our first interest rate cut in June of 2025. Let's go to July. Each one of these in the meetings might get the cut there, might stay the same there. September. So this year, basically what I'm seeing this year is that we're going to get one interest rate cut, and it's going to drop it to 4 to 4.25% on your Fed funds yield, which is very interesting because my view of Trump is that he likes low interest rate environments, with the caveat that we have a hell of a balancing act that needs to be done over the next several years, really, because of what's been done for the last 10. Since 2014, we have the most ridiculous interest rates. Taking rates to zero was an absolute travesty. If you are to drop rates right now to, let's just call it 3%. Let's say you drop rates today to 3%. Inflation is going to fly back up. I think all of you out there still see inflation going on. You go to the grocery store, you're paying a ton of money. Things are not coming down. Have they settled? Yeah, absolutely. But the day-to-day is still crazy. Airports, buses, bus tickets, public transportation, I should say, overall, it's still very high. Cars, still expensive. My mind is blown on cars. Back in 2005, 2014. I think my truck was a 2014. I bought a new pickup truck in 2014. All the bells and whistles you could possibly think of. Okay. It was a Ram 1500 diesel, had every Longhorn edition, everything, $53,000. I go and buy a truck in 2024. It was a Ford. Now, granted, it's the Roush edition, but $100,000 for a truck. How does a truck go up for the same trim level, basically, double in price in a decade? Things are expensive. Things are not going away. You see, I saw there was a story out the other day that egg prices are not coming down. Eggs are a staple of everything. You think about where eggs are at. My point is, inflation is sticky. It's not going away. I don't know how you combat it. I think it's too far gone to be able to combat it with interest rates. It's a very, very multifaceted thing that you're going to have to do to bring this down to really almost tame the market, or tame, I shouldn't say tame the market, tame the entire economy is the real thing. So looking at the rest of this week, what do we have going on? Well, let's go to the economic calendar here and just see, because we also had PMI numbers come out this morning. Market didn't like it. I was thinking it was in this story right here. Was it here? Yes. Early on Tuesday, the Institute for Supply Management Manufacturing PMI indicated the manufacturing sector continued to expand last month. Oh, okay. Although the index jumped to a nearly 2-year high of 64.4, up from 58.2. The surge in prices is a worry of the Fed. It's consistent with the PCE core inflation. Yep. Then there you go. Like we already talked about the jobs number. So let's go back to that economic calendar. So we have Fed President, what is today, the 7th? Christopher Waller speaks tomorrow. Jobless claims come tomorrow. The Fed minutes come tomorrow. We have a bunch of Fed presidents speaking on Thursday. And then here you go, the U.S. unemployment rate, U.S. hourly wages, those numbers are coming out. When it comes to the unemployment rate, I would encourage everybody to go look at the underemployment rate. This number, 4.2, this doesn't include people that are not looking for jobs. They're not in the labor force of looking for jobs. So if you go here and you type in U6 underemployment, I think I butchered that spelling, but that's okay. Where is it? I want to find the unemployment. Yep, the Y charts. This is the number that is probably more accurate. Looking at this, 7.4%. These are people that are not actively looking for jobs anymore. These are the numbers that we should be paying attention to. That's why when I see this number come out, it's total nonsense. The U.S. unemployment rate, or whatever it is, 4.2%. You take it. It's a joke. And you also see that hourly wages are not keeping up with inflation. So another joke. But really, when I make a video like this, we're looking at all these things. It's fun. By the way, the stock market is closed tomorrow. I'm sorry, the stock market is closed on Thursday for Jimmy Carter's funeral. So the stock market is completely closed. Federal government's closed. Probably better that the federal government's closed than open, but that's besides the point. The reason I look at all this stuff, it's fun. You see what moves the market. Treasuries move the market today. The JOLTS number moved things today. But overall, don't get too caught up in this. Guys, there's going to be news that comes out every single day. Every single day. You cannot make financial decisions, whether they're for your personal investing or buying things. You just can't go by the day-to-day news that you're seeing out there. It's a crazy world. Think about what's happened just in the past 12 months. Think about the past 12 months of how much chaos we have had, how many big stories there have been, how many significant moves in the stock market there has been, how inflation was rearing its ugly head 24 months ago. Now it's less than 75% cut to where it was. We had 9% inflation for a certain amount of time there. Do not get caught up in the day-to-day. It's fun to look at. It's fun to think about, but don't change your financial decisions, especially in investing, based on where things are going day-to-day in the stock market or the economic markets. Guys, if you like videos like this where we just cover a gamut of things, what's going on that day, what certain stocks are doing, yada, yada, click this video right here. Go and enjoy the next one. Have a great day.